G'day, Trent Fleskens here from Strategic Broker Services, and today we're talking about family guarantees. Now, the family guarantee is nothing new. In fact, it's been around for over a decade as a way for parents, grandparents, or siblings to help their family member get into the property market earlier than they otherwise would have. And it's working something like this. Let's say I want to purchase a property, usually my first home, and the property I would like is going to sell for $500,000. Usually, the banks will need $100,000 or 20% from me if I want to avoid paying lender's mortgage insurance, which is seen by many as an empty burden to be avoided at all costs. However, at the moment, my savings amount to $60,000, leaving me $40,000 short. And whilst this is a fairly good deposit, it puts me in LMI territory, having saved only a deposit of 12%. In this situation, I can approach my parents or sibling to provide the bank with a guarantee for the $40,000 I am short. And these days, that guarantee can be limited to just the amount I need. What this guarantee is a promise to the bank that if I can't repay my mortgage or find a tenant to do so, the family member that gave the guarantee will. And if they can't, the bank can legally come to them to pay back any losses incurred once they sell my property and pay off the remaining loan. If you're a parent watching this because your child has asked you to be their guarantor, I know it can be a little hard to feel that pressure and fear of being liable for an extra $500,000 mortgage. However, remember, at the very worst, if you can't find a tenant to cover the mortgage, the amount you'll be liable for will be the lesser of the difference between the loan outstanding and the amount the bank sells the house for, or the limited amount you guaranteed in the first place. Yes, this could still be $40,000 in this case, and this is where you need to have a strategy to ensure that if the worst case happens somehow, regardless of how unlikely it may seem, you could still find that money without selling the house. This is where the limited guarantee comes in handy, as it is solely limited to the amount a family member chooses to provide. Now, in the past, banks also allowed family members to provide guarantees on servicing of loans, so that someone with a low income could purchase a house they technically couldn't afford, as long as the family member had their back. But logically, the servicing guarantee is no longer in play these days, and often, even if a family member is willing to provide a guarantee on equity, the banks may still decline an applicant simply for their income being too low. Family members are becoming a more and more prevalent and necessary way these days as a means for young people to get into the property market, and in many cases it's the only way they ever would. Whilst Generation Y has the propensity to make a high income and earn a wage to afford the loan, our lifestyles have changed to a point where saving that $80,000 to $150,000 to receive a home loan seems nearly impossible. Eventually, whether through market appreciation over time, paying down of the mortgage, or an active development strategy to unlock the equity in their home, that family guarantee can come off and the child or sibling can take their folks out for a big steak dinner to say thank you. Here at Strategic Broker Services, we take particular pride in assisting young clients kick off their investment journey with a family guarantee. So if you're a parent with a keen interest in getting your child into the market, or you're generally interested in gaining a more in-depth understanding before pitching this to your family, I implore you to give a member of our team a call and we'd be really happy to assist you.